All right, guys, welcome back. This is the third time. Third time's a charm on this one. We're going to be going back through some of the 13F filings for the first quarter of 2020. Now, a lot of you guys may know what a 13F is, but if you do not, it's basically the institutional investors or the large funds that invest throughout the world end up having to report to the SEC what they have invested. So people like Warren Buffett, people like Carl Icahn, people like the Saudi Arabia Public Investment Fund, which we'll be touching on today, all have to submit by middle of the May-ish or a couple months after the end of a specific quarter what they had on the books by end of 1Q. So all these positions are basically as of March 31st of 2020. And so specifically when we get into Warren Buffett, some of those things that he has invested in that, say, 13F and the 1Q, are actually sold. So some of these actually from the Saudi Arabia Public Investment Fund could also be sold as well. But as of the 31st of March, this is what they kind of had on their books. So relatively cool to look at. So at the moment, it's around $11 billion worth of investment. So a little bit smaller than, say, a Berkshire Hathaway's portfolio, a little bit smaller than say a Carl Icahn's portfolio as well, because he's up around 17-18 billion, but cool nonetheless. And they entered a lot of new positions, so I'm really excited to show this one for you guys today. Some of you guys might be familiar with the fact that they had invested in Uber in the past, and they have about a 4% position within Uber. They sold out of their shares in Tesla, which we'll touch a little bit on today as well. And then they entered like another 15-20 positions almost, and pretty crazy stuff, actually. Pretty risky stuff that I wasn't really expecting. So let's just hop right into it. Instead of getting right into the nitty gritty left hand side, let's just look at pretty basic pie charts here. So on the upper right hand side, we're looking at the capital allocation by sector. And this is basically just going to tell you what the value of each individual position by sector is. And so of that $11 billion, let's just say they have about 25% of that in energy, 7% of that in industrials, 36% or so in information technology. And that's kind of how you can kind of break it down. So they have about 1.1 billion in financials. So you can kind of look at it relatively quickly and say, okay, well, how much do they have invested where? And on the left-hand side, we have the income by sector. So obviously some of these companies pay dividends, some of them do not. And so even though, let's just take, for example, energy is about 23% of the portfolio, it's almost half of the income coming from the portfolio. Now, it makes a decent amount of sense because when we look at it a little bit, energy stocks are pretty depressed right now in terms of value, but they're paying out pretty big dividends. And of course, if some of these dividends cut, like Shell has, that sort of energy income sector would probably drop, as well as some of the consumer discretionaries as well. So we'll kind of take a deep dive into what companies are specifically invested in each one of these sectors, but just wanted to scroll over to the left here to kind of give you a table format of it. On the left, or in the center rather, you can kind of see the income, and on the right side, you can kind of see the value of each of these sectors, and the sectors kind of go down here on the left. And the yield is also present here. So you can kind of see throughout all these sectors how much value is in here, how much income is in here. And then obviously with that, you can kind of get a yield by sector if you're interested. You can see the yield for energy is about 6%, which is pretty crazy. Yield for the entire portfolio on a yield on cost basis is about 3.36%. There were some positions that didn't have prices at which they invested. So some of them or ended up being a zero, so that might skew this a little bit. And then the dividend yield as well is about 3%, because obviously the price has riz a little bit, because I think they invested about 8.5 billion in this last quarter, which is kind of crazy. And we'll touch on that a little bit when we get into the actual deep dive. But when you take a look at how much income is actually going to be coming from this bad boy, it's around $328 million a year, which is kind of cool because that ends up being about $27 million a month. And we can end up looking at the monthly kind of cash flow statement with respect to dividends at the closer towards the end of the video. Keep in mind that I don't know if this is true for, say, Saudi Arabia, but I know some of the folks that follow me from the Middle East, they end up paying about a 30% right off the top for dividends. And so just that being said, this $27 million dollars that's going to be coming in on average every single month is really going to end up being chopped down by about $90 million overall, if you're kind of looking at this total here, or about $9 million a month. So yeah, pretty crazy in that respect, but overall, looks pretty cool and looks like it's a lot of new positions you'll see when we jump into the portfolio aspect of things. So hopping right up, let me just get back up here. So like I mentioned, we ended up getting about 20 to 25 positions. I did say 15 to 20 earlier. Two that I really want to bring up at the moment is Uber. Uber was a pretty significant position stake that they invested in, I think a couple months back, but it's about 4% of all Uber shares, which I thought was pretty significant. And they have a good cost basis of around $27, $28 or so. So they have a pretty big chunk of Uber. I think that's over like 728 million shares or 72 million shares or something like that. And they end up sitting on about a $418 million profit just at the moment. Let me move this bad boy really quick. Let me move these two columns really quick. Whoops, so that way we can get a good look at them with ease instead of having to kind of like really dive deep and keep scrolling left and right. And by the way, as we kind of look through this tracker, if you're interested in it, there's a link in the description if you guys want to kind of build something. It's relatively cool to use, relatively easy. I've been kind of building up how to use these trackers and teaching myself how to use them for the past 7 years. And so this is kind of like the culmination of like my investing work that I've kind of done over the past 7 years. So you can easily grab it in the description if you're interested. Tesla, this was one where they actually had like 31,000 shares or something like that, but it ended up being like a $31 million profit. They sold all of their Tesla shares, so I don't know, they didn't disclose what price they bought their Tesla shares at, but they ended up having like, actually it was like 318,000 shares for like a 30 something dollar profit. 30,000, no, 31, $32 million profit. I'll double check and I'll put it on the screen. So they did take a pretty decent stake in all the rest of these companies they just invested in this past quarter, right? So if you look kind of down on this quarterly share increase or decrease, they had 100% increase in all the rest or the remaining shares that you kind of see here. And so we'll just kind of hop right through them. So they basically bought ADP. Don't know too much about ADP, but yeah, I don't have any due diligence on it, so not much to say with that one. But Bank of America, they bought at 21 bucks, which is a pretty good price. I'm not going to lie to you guys on that one. I personally would have bought it as well. And yeah, I mean, I think that's one of the higher quality banks that they could have bought. Berkshire Hathaway B shares at 182 bucks. A class, I would have done the same. If I had a bunch of money and I wasn't focusing so much on dividends right now, I would do the same. They bought Boeing at 149. I think that that's a good opportunity for them as well. They are down 10% almost at the moment on these shares, and keep in mind that's not including let's just move the price over here so we can see it as well. That's not including today's massive jump up, because the price did actually jump up about 11 to 12% today. So they were probably sitting closer on like a 12 to 13% loss before today. But let's just look here. So they have Booking Holdings. They're sitting on a 14% gain on that at the moment. They did buy some BP at around $24 a share. So sitting on a 3% loss at the moment, so just under 25 million. Canadian Natural Resources, they bought at $13 a share. They bought about 2.5% of the entire company, which is pretty crazy. They did almost buy 1% of Boeing, which I thought was interesting as well. So keep that in mind, that these are pretty big numbers and they can end up buying a pretty big chunk of some of these companies. Exactly like what I'm mentioning here with Carnival Cruise, 6% of the company is now owned by Saudi Arabia Public Investment Fund, which is kind of cool. They bought at 13 bucks, which isn't the best price. I bought personally at like 880 or something like that. But I mean, it's not like a competition here. We're all just in here to try to invest in great companies at great prices. And I think Carnival Cruise is going to be a turnaround story. Yes, it does have some risk associated with it. Could go bankrupt, but they're sitting on a 10% gain at the moment. Just like in Canadian Resources, they're sitting on like a 40% gain, $150 million gain at the moment. Citigroup at 42, I probably would have done the same. I'm not a big fan of Citigroup. I'd rather buy one of the other couple big banks, but it is what it is. Disney Company, they bought at 96.60, which is kind of a cool. They're up 20%, man, over $100 million at this on this position alone. Facebook at 166, dude, like that's high quality. It's already up almost $50 a share since that point, so they're sitting on a 28% gain, $150 million gain. At the moment, IBM at 110, can't complain with that. I probably would have bought the same if I wasn't focusing on some of these other positions in my portfolio. A lot of people have been jumping into IBM. Hope it works out for them. You got Live Nation. I'm not a big fan of Live Nation. I don't know. I've looked at it before, but at the same time, from an entertainment perspective, they're one of the biggest talent groups out there. So can't really scoff at it, but at the same time, I'm like, eh. Then you got Marriott International. They bought 2% of it, just like they bought 4% of Live Nation, and they bought it for just under $75. So they're currently sitting at about a 25% gain, $126 million gain. Pretty wild. They're buying some pretty good stocks at pretty good prices at the moment. Buying them at the end of the first quarter at like the perfect moment. So I'm really curious what they've done since the end of the first quarter. You have Pfizer, they bought at 32. That's sitting on a 16.5% gain, $12 million gain as well. QCOM, they bought at 67. I don't know too much about QCOM other than the amount of chips and stuff that they provide for Apple. And a buddy of mine invests pretty heavily in them. Then you have Shell. They bought a decent amount of Shell as well, about 1/3% of the company at just under $35, which I think is a pretty decent price. I'm not going to lie to you on that one. Down 6% at current moment, and get a pretty decent dividend from this one as well. Even though they did cut the dividend, they're still going to give some pretty good cash flow off of owning, almost 1/3% of the entire organization. Starbucks, they bought at 65. You couldn't really have timed that any better. I mean, that was a pretty good purchase. At that point, it did dip into the 50s, but I mean, you can't time the bottom on everything. They bought Suncor at 15. Wow, I'm impressed. So anyway, I think Suncor is kind of a gamble as well, just based off the fact that it does have some pretty significant Canadian oil sands positions, which I think if you're kind of going to align to the Paris Accord, it's going to be a little bit difficult. But they do have some high quality refineries and stuff in their portfolio as well, and they do have some offshore Canada investments as well. So I do think that is a good company to invest in if you can handle a little bit of the risk in the debt. But I mean, that's to be said about any oil and gas company at the moment. Total, the same. That's just an energy company. Pretty surprised that they went with, let's say, BP, Shell, and Total, and there's not any Exxon in here, which I was rather surprised about. But I don't know if they're just kind of trying to invest in, say, their like their European counterparts in oil and gas, rather than strictly like their Exxon American counterparts. But it could also be because the BPs, Shells, and Totals of the world are trying to transition outside of fossil fuels a little bit, and they're trying to get into more renewable space. And so that could be what they're doing. They're investing in oil, but they're also transitioning to renewables. So maybe that's Saudi Arabia's investment into the renewable sector and trying to get a little bit more into that. And then you do have a good position on Union Pacific at 141. Not the best. I think Union Pacific got down to 110. Let's check. 105, yeah. So They didn't get the best price on Union Pacific, but still, I mean, they got a pretty good chunk of change here. 0.1%. I wish they bought more, man, because I love Union Pacific. And if I had more money and I realized that Union Pacific is down in the 105 range back then, like back a month and a half ago, I'd have been buying up a lot of it. And I'm upset that I took my eye off the ball on that one. But unfortunately, when you buy individual securities, sometimes that's what happens. You're researching individual companies and you're spending your time in, say, a Caterpillar and for an industrial position that you want to buy into, and you're missing something like a Union Pacific because you can't watch all industrials all the time, or I need to adjust how I do a little bit of my research. So, um, so yeah, as some of you guys may know, that this utilizing this tracker is kind of like how I automatically forecast out how people get some dividend payments in here. And so what this does is it basically just says, hey, what's the dividend payment for each of these companies? Forecast goes out into the internet, says, when are these companies paying dividends? And it kind of uses it to create this kind of cash flow sheet for you. Because before in the past, I've had to like kind of manually make this table and it's kind of a pain. But anyway, kind of just want to run through these different companies that pay them and see how much they're kind of getting paid every single quarter. So with ADP, they're getting paid like $500,000 every single quarter, which is kind of cool. Bank of America, they're getting paid about $4 million every single quarter, which is really cool. BP, they're paying about $21 million every quarter. Um, is that a million? Yeah. So AVGO, they're paying about 1 million every quarter. Canadian Natural Resources are paying about 9 million. Carnival Cruise, if they were paying, which they are not anymore, they'd be getting about 17 million every single quarter. So technically this is wrong. I should be removing this 69 million here. But I think as soon as the company goes past the 90 days beyond the last time they announced a dividend, this will automatically go away. Cisco, just under $4.5 million every single quarter. Not bad. Then you have $6 million coming quarterly from Citibank. So Facebook, nothing from them. IBM, they're paying about $1 million a quarter. Marriott, they're also paying about 3.3, although this is one of those ones that's kind of sitting in between that time where the sheet can actually track when it's supposed to cut the dividends and not. Then you have Pfizer, which is paying just under $1 million as well. QCOM, which is paying 747. Then you have Royal Dutch Shell paying a new dividend of about just under 4 million a quarter. Starbucks paying just over 483, and then you have Suncor paying about 4.5. Total not paying anything at the moment, and then you have Union Pacific paying just over 500,000 a quarter. So relatively interesting, pretty cool to kind of look at here. Curious to see what companies will cut the dividend here. I know Disney in here is 0, so let's put that bad boy in. So you do have some of these companies that will be suspending dividends in the near term. Who knows if in the long term they will. And so that will kind of play out as a whole. And we can see really quick that the 2020-2021 are about the same. And you can see that they do have a month where they get about 15 million. So the first quarter of every month they're getting about 15. The second quarter of every month they're getting a little bit less than 10 million. And in the third month of every quarter they're getting just under 60 million. So I'm very similar. The first and second month for me are generally way below the third month of the quarter, and so this isn't anything atypical, especially if you're investing in like oil and gas companies. And a lot of companies, just to be honest, financial companies are famous for paying on the third quarter of every month. So third month of every quarter. So that's not anything that's not too, I guess, unexpected from my perspective. I guess what was a little bit surprising to me, just knowing what Saudi Arabia is trying to do, they're trying to diversify a little bit out of oil and gas. And so what was surprising to me was their investments in some of these oil and gas companies. and specifically like some of their direct competitors, I guess you could say, like the BP, Shells, and Totals of the world, and also Canadian Natural Resources and Suncor. So that is a little bit confusing to me why they would take some of this $11 billion and have it invested in those companies. Maybe it's just the fact that those companies are a good value right now and Saudi Arabia sees that. But I also thought that they could utilize this money to get an opportunity to invest in more renewables directly. Maybe they are utilizing some of those investments in like the Shells, BPs, and Totals of the world to invest in some renewables because all those guys are going down that path. But that is still surprising to me. The information technology aspect of things is not surprising to me at all. What was surprising was some of the consumer discretionary stocks that they bought into, like Carnival Cruise, Marriott Hotels. I can understand from kind of my perspective why they would want to buy such big portions of those. They are distressed at the moment. So it would be a good opportunity to purchase those, especially if you're kind of going with some more conservative investments in banks here, which I think they are doing a really good job. And Boeing, I think, is a really good investment as well. Um, so I think they're kind of playing a good game of balancing a little bit of their risk, as well as trying to and diversify a little bit out of oil and gas. But at the same time, I'm not exactly too sure how big of an impact, let's say, the cash flow of about $30 million is really going to help them as a kingdom. And I'm curious how they are going to continue to grow this fund in the future. Um, as I know that they're going to try to continue to take some of those dividends from Saudi Aramco and probably invest it into this fund to try to get a little bit of outside exposure into other things. So that way they're not 100% entirely reliant on oil and gas. So anyway, that's just my quick rundown of the Saudi Arabia Public Investment Fund. I think it was really cool. I think there's some really good opportunities in there. There's some ones that I wish I got myself. I definitely think that they should have invested in something like a Visa and a MasterCard. I was surprised that those weren't in there. Um, but hey, I mean, they did get some really high quality bank stocks in there. I really am curious why they went with Citi and Bank of America and not like a JP Morgan. I like JP Morgan a good bit. Maybe it's because Citi has a little bit more international exposure than say like a JP Morgan does, but even still JP Morgan has a pretty good international exposure. um, but hey, I mean, I don't know. I'm curious if they have any sort of funds or interviews kind of coming out that kind of state some fund managers kind of stating what and why they're investing in some of these companies. But hey, I think they're doing a good job so far, man. I mean, I can't complain. Let's just look how much they're up. I mean, they invested. Let's just take a quick look. Um, they're up 1.1 on their current investments, and so 1.1. So yeah, taking out their, let's just say, Uber position, which I think was a pretty significant stake, if I'm not mistaken, was a $2 billion stake. So if they take that out, the market value of all these is about 8.5 billion, sorry, and this investment cost basis was about 7.5 billion. So cost basis as a whole for all these is around 9.7 billion. So yeah, they ended up investing just over 7 billion in this particular quarter alone. So I'm curious to see if it's just because of the recent downturns and they said, hey, we can get some pretty good bargains right now. As you guys can tell, because they've made about $1 billion return on their investment at the moment, just based off of these percentages returns that they've gotten as of now. Or are they going to continue to buy into some of these companies even still in the future? I don't know. All remains to be seen. And I guess we'll find out when we look at the 2Q13F, which will be coming out probably in the August timeframe, I would assume. So, all right, guys, I will catch you on the next video. If you're interested, hit the like and subscribe button down there below. If you're interested in the spreadsheet, make sure to hit that description button, and you will be able to find the link for that as well. All right, guys, I'll talk to you guys on the next video. Cheers.